So I'm just gonna go through the process that I go with everybody when I'm working on how to go through to the life insurance. So there's really a 3-step process that it comes down to for whether I'm talking to somebody that makes $10,000 a year or $10,000 a day. It's the same process. So the first step is to figure out how much insurance you need, and to do that, there's a formula called DIME L. Right, and so the D stands for debt, student loans, credit cards, cars. What kind of debt do you have outstanding right now?
I have a mortgage, I have student loans.
So the M is for mortgage. What's the balance on the mortgage?
253.
253. All right, cool.
Yeah.
Student loans, credit cards.
Not car. Car's 23.
Car. Okay.
Student loans, 17.
17. Okay.
And credit card 6.
6. All right, cool. So that's 46. I stands for income. What's your income on an annual basis per se?
106 before tax.
106 before tax, so 70-ish after tax.
Mm-hmm.
Cool. And do you have anybody? You're not married, no kids, right? So parents are alive or no? Cool. So
yeah.
Usually if you're married with kids, we recommend like 10 to 30 years worth of income. You can probably do like 5 to 10 years worth of income. But just the question becomes, if God forbid something happens to you tomorrow, how much money would you want to leave behind to your family?
Yeah.
Right? So who would be a beneficiary for you?
My little brother.
Little brother? Cool. So right now, you're talking about you would want to leave some like education. How old is he?
21.
All right, cool. So E is for education. You don't really have any kids or anything to leave education for. Your income's $70K at the end of the day. So you're talking about like if you do life insurance is tax free, so I'm going with the post tax number. So usually like 5 to 10 years is what most people leave behind. So that would be like $350,000. And the L is a legacy area. So L stands for legacy. It's just right now if you add this up, 350 and 250 is 6 and 46 is 50. So you have like $650,000 between these three of life insurance need. Is that enough to leave behind to your little brother, or do you want to leave behind more?
I mean, he'll be happy with whatever I leave him.
All right, cool. Yep, whatever it is. I made, for me personally, my little sister's my beneficiary. Mine was about $650, and I just made it like $1 million because it sounded cool. If I got hit by a truck, I'd walk behind. But $650 is fine.
Put $1 million. I'm gonna take a picture and send it to him.
All right, cool. So then the legacy would be $350, and so $1 million would be the total need, and that's where you get the math from. Does that make sense?
Makes sense.
All right, cool. That way he could pay off all your debt. He could get your income for 5 years. He could pay off your house and keep your house, and you don't have to like liquidate everything in court like most people do. You know what I mean? The second step is figuring out how much insurance you can afford. And so you just use a simple budgeting formula for income minus expenses. You're bringing home about like what, $6,000 a month? Okay, cool. And then do you know what your expenses are on a monthly basis?
Yeah.
What are they?
About $5,000 a month.
About $5,000 a month? Cool. So is it safe to say that every month you have about $1,000 left over?
Yes, my fun money.
Okay, cool. That's your fun money? What do you do with this money now?
My fun money?
Yeah.
Stuff, shopping, drinks.
Cool. So.
But that $5,000 includes me putting stuff to like savings.
Okay,
so
cool. So then how much do you put in savings every month?
1,000.
1,000. Okay,
yeah.
Cool. So you spend you put 1,000 in savings and 1,000 in fun. Okay, cool. Is there any money out of this fun money that you are willing to invest into your future?
Yes.
How much of it?
I could probably do like 500 a month.
500 a month. Okay. So 500 is 500 for fun. Okay with you?
I bartend part time, so if I make more, then I'm allowed to go out more. So I use my bartending money for like my
good deal.
money.
All right, sounds good. So there's fun money, and then so boom, there's more for your future. Now, are you saving this money? Where are you saving this money at?
So 500 goes to an IRA, and then 500 is like an emergency, easy for me to like grab if I need it.
Okay, where's that money at?
Like a little savings account on Bank of America that I just.
Cool, and that's gaining what, 0.01% interest?
Yep.
Cool, and this money in the IRA is in the stock market?
Yeah.
Why do you say it like that?
Because I don't feel like I buy stuff like the generic Boo and stuff like that. Like I'm not too well versed, so some like probably half is just chilling there and half is invested because I don't know where to put it.
Do you know what the total balance in your IRA and in your savings is right now?
So the IRA I opened not too long ago. I checked it this morning. It was like 4,200 in there.
Okay, so 4,200. Cool. And then what about here in your savings?
4,000.
4,000.
I'm doing a bathroom remodel. Just telling you guys my whole life.
That's cool. That's what I'm here for. When you're working with somebody and you're talking to people about your money, you gotta be open. All right, cool. So the bathroom remodel is coming out of this 4,000?
I already took some out, so I had more, but that's like what's left right now.
Okay, cool. How much more do you need for the bathroom remodel?
Like $2,000.
$2,000. All right, so minus 2,000 for the bathroom, and so you got 2,000. What's the purpose of doing the bathroom remodel? Just because you want to?
Yes, you should saw before. It was ugly and gross.
Okay.
It just needed to be done.
All right, so between the IRA and the leftover money in your savings, you have about $6,000, right?
Yeah.
All right, cool. And so, do you like putting money into your IRA in the stock market, or do you want to follow Warren Buffett's number 1 and number 2 rules of money?
Option 2.
All right, cool. Do you know what his number 1 and number 2 rule of money is?
No.
His number 1 rule of money is don't lose your money.
Yeah.
And do you know what his number 2 rule of money is?
I don't know, buy life insurance.
That would be his number 3 rule of money. But number 2 is don't lose your money also.
Okay.
But read number 1 again. Right? And so can you lose your money investing in stocks?
For sure.
So then does it violate his rule?
Yeah.
Right. It does. Even though everybody does it, just because everybody's doing it doesn't mean it's the best thing for people to do. Right? And so if you could take some of this money and put it into an alternate bank for yourself, where instead of getting 0.01% interest, is it okay if I can 500x your savings? And number 1, is it okay if I can 500x your savings?
Yes.
And is it okay if I can guarantee that you'll never lose money again?
Yeah, that'd be great.
All right, cool. So in doing that, you would essentially move this money and this money, and instead of contributing them to that, and we can dump this in. I wouldn't take too much of your fun away, right? I want you to still have fun. You still got to do your girl stuff. So I would set up a policy that's about $1,000 a month with the opportunity to put more cash into it later. So when you're bartending or you have extra money, because you don't want one of your girls to come in town and you don't go to a nice dinner because that's the last thing that I want. You have to be able to live your life. Like, you're not choosing, do I go get my nails done or go do life insurance? It has to be something that you do every single month no matter what. And then if you don't do that thing that month, then you can throw extra cash in there. So the third type, or the third situation, becomes what type do you do? And so you're right in saying that you want to do permanent life insurance because that's the one that builds cash value, it never expires, and it's all tax-free cash, right? That's permanent life insurance. The other option is to do a term policy, but a term policy expires, doesn't build any cash, and therefore it's not tax-free, right? And so
why would people even pick term? Is it like if they're gonna die soon?
No, actually, most people choose term because it's the positive is that it's affordable, right? But it expires 98% of the time. So most people, why do people go to McDonald's? Right? It's accessible and it's
Yeah.
cheap, right? So most companies, like most people get term policies through Nationwide, State Farm, Allstate. These companies, they really are car insurance companies, but they
Yeah.
just sell term on the side. That's another way for
Okay.
them to make money. But term policies is most people, if they don't understand life insurance, then if they only care about it being money that's gone to their family, then they might get a term policy. But term policies expire 98% of the time. So a good example of somebody that would need a good term policy is a family that has multiple kids and has a lot of this stuff. They have a lot of debt, they have a lot of income, they have a lot of mortgage, and they can't afford a permanent policy to cover all this stuff.
Okay.
That's why somebody would get a term policy. I have a mix. I have a $2 million whole life policy and a $7.5 million term policy. But the term policy allows me to put more cash into my whole life policy. Just getting into, it's like advanced part of life insurance.
Okay.
But
so like your whole owns your term?
yes, it's called a blended policy. Yep.
Okay.
And so sometimes that's important. But then you can convert the term into whole life. So every time I make more money, I would convert it over. I would convert it over. I would convert it over. Yeah.
Into the same hole, or you have to open up multiple
It's
holes?
another hole, but it still adds more cash. It doesn't really matter whether it's the same or different. It still has the same functionality. Does that make sense?
Yes.
Yeah. So basically, this is where we're at. So, I always like to re-clarify everything. We're talking about needing about $1 million of life insurance. You can afford putting $1,000 a month instead of putting this money into IRA and savings. You don't want to lose any money in the market, and you don't want to get only 0.01% interest. So you're moving this money, and with the opportunity to put some extra fun money or some bartending money or some extra bonus money in later into the policy. And so you'll be able to put up to 10 times the monthly amount that you're putting in right off the bat for year one, and then you'll be able to put up to 4 times that amount every year for the future. Which means that if you're putting $1,000 a month into a policy, you can put $10,000 a month into that policy your first year, and you can put $4,000 a month into the policy every year for the rest of your life.
Okay.
Cool?
Yeah. And then, like, God forbid, what if, like, I need to pull out?
Sure.
I can't do that anymore. What happens?
So you have 3 options. Number 1, you just cancel your policy and they send you a check for the cash surrender value. That's number 1. But that's not the best option. Number 2 is you borrow money from your life insurance policy to pay the premiums. And number 3 would be that you decrease the premium and use cash from the policy to pay the premiums and then go back to it later.
Okay. Makes sense.
And that's how that works. And so basically for here, do you have any questions about how much you need, how much you can afford, or what type of life insurance you want to do?
No.
Okay, cool. So then the approval process from here on out is similar to how a mortgage works. So this is somewhat of like a pre-approval stage of like, all right, cool. We know you need this. We know you need, this is what you got. So now we need to submit an application into underwriting so that they can do underwriting for the life insurance policy. Does that make sense?
Yeah, if I choose to do less.
Yeah.
Like start off.
That's cool.
To get used to it.
Yep.
That's okay?
Absolutely.
Okay.
Absolutely.
And then
Yeah.
could I increase it like later, or is just me being in?
No, you can increase it later and you can dump more cash into it later. I would actually rather, for your own purposes, start lower, be able to fund it more, but you have to play with the numbers a little bit, because if you want to put more, like if you start at 500 instead of 1,000, it'll be maxed out at 2,000 a month. So like that's so you want to be able to use that. So I'll always submit it at a higher number, and they're gonna underwrite it for the amount, the max, and then if you want to drop it down, you can. but the functionality of it is you want to set yourself up for the future. And so you're already putting $1,000 a month into these things. You're just moving money from there to there, and we can even take this $6,000 and supercharge it from the front. Like just dump it in up front and have cash value ready to go.
Okay.
Like,
this is a lot.
It's okay. But yeah, it's gonna be quick. We'll submit it into underwriting. You're not obligated to do anything at all whatsoever. All right, you can either lower it, increase it, or not do it, and that's cool, right, with me. But we just wanna, right now I'm just giving you preliminary numbers. We just need to submit something to get some real numbers, and then we'll schedule a call to come back together, and you can have more time to understand it more in between. Is that cool?
Okay. And the underwriting is, I mean, I don't care about pulling my credit, but we'll pull my credit. What do you need?
No credit, no financial documents, no nothing. Most likely there's a 70% chance that you don't have to do anything because it's going to be under 2 million and you're under 50. There's a 20 to 30% chance that they'll have to do, it's all based on your health, not your credit. So they might have to do a physical exam where a nurse comes to your house for 10, 15 minutes and does a physical with you. But that's it. Yeah, life insurance is not based on credit. It's not based on financial documents. There's no background check. It's not like that. Yeah, and you can borrow money from your policy without any of those things too. But then how can they
prove that, like, I have money to pay this?
It's all based on your health. If you don't have money to pay it, your policy's going to lapse as soon as you start the policy. It'll bounce and then it'll cancel.
And do you get, like, in trouble?
No, there's no.
You don't go to jail?
There's no in trouble. You don't go to jail. You don't get a hit on your credit report. Like, none of that happens. It's totally independent. Life insurance is older than the IRS, older than the Federal Reserve, older than the tax system, and older than all of us put together. Yeah.
Okay.
Cool?
Sounds good.
All right. Awesome.